Hello, everyone. This is Ryan Sean Adams. I'm today's moderator, host, joined by Michael Nato. He's the author of the Solana Q3 quarterly report. You guys can think of this as almost an earnings call for Sol token holders too. I mean, that fits. Holders and hoarders for Q3 2025. And Mike and I have been doing this for the last couple of quarters. We plan to do this every quarter moving forward. You could just imagine if Sol holders had a quarterly earnings report and call. That's basically what this is. That's what we're driving at. You can access the full report at the DeFi Report.io. There's a lot more material that we're not including in this call that is all there. It's just some housekeeping before we begin. So all of the data backing these reports and backing this call right now is based on public on-chain data sets that's been mostly compiled by the DeFi Report, a lot of additional data partners as well to thank. This is provided as a public service. This is not affiliated with the Solana Foundation. This is something that we as analysts are creating as a public good. This full episode, everything we're talking about in the next half an hour or so, it's going to be available on Bankless YouTube on the channel within right now, if you're watching this live, it's also available on X, but you can look at the archive on X or Bankless YouTube. We might be taking some questions if there's any good ones that come in. So if you're in the live chat, you can ask those questions. We'll get a moderator to get that over to us. We're going to start with some opening remarks and get right into the data and then some closing remarks. One thing I should say before we begin, this report and this effort and this earnings call would not be possible without our friends over at Solstice. So they are the sponsors of the Q3 2025 Solana report. Solstice is a fantastic, very interesting project. They spent 3 years privately operating delta neutral strategies just to prove their product works. They've got a positive yield in every month since inception. Now they're bringing that performance to public. What is it? What am I talking about? You can think of Solstice as it's almost like Athena for Solana. So, Athena, they have a stable coin. They work on a delta neutral strategy to create AUM for that stable coin. They've got Solstice has about 200 million in AUM. It's all powered by their stable coin USX, and that's been a fast grower. So USX right now is the 5th largest stable coin on Solana. You can check them out at the website I've got showing right now. That's solstice.finance. And we want to thank them again for all of the data, for doing stablecoin stuff on Solana, and for sponsoring this report. Mike, high level, Q3 2025, what were the results for Solana? How did we do?
So I'm going to categorize this as a mixed quarter for Solana. So, at a high level, the economic activity on chain contracted compared to last quarter, which was also down relative to Q1. And, part of the reason for this is Solana had a really strong breakout period in Q4 last year into Q1 of this year. And so we kind of are comparing to a pretty high base in terms of what was happening on Solana at that period. And so, yeah, economic activity contracted a little bit. There were some interesting bright spots in terms of what's happening in their stablecoin economy. And we saw some growth there. We saw some interesting velocity there, a lot of growth from USDC during the quarter, and some very interesting stuff happening in DeFi, which we will get to. There is this development within Solana DeFi amongst private automatic market makers, which are different from public automatic market makers or DEXs. And we're seeing a lot of growth in that category, which we'll get to later in this presentation.
DEX volumes were up though in the quarter, right? That was a bright spot.
They were up. Yes, they were up. Yep.
Okay. Very good. So we'll talk about DEXs. We'll talk about stable coins. Let's start here though, at the highest level, which is a metric that I know many Sol token holders look at quite a bit, which is real economic value. And I think the right way to think of this, Mike, correct me if I'm wrong, is basically revenue on block space fees, either the ordering of Solana block space, so that would be MEV type stuff, or the actual fees for getting like priority transactions in there and just purchasing of the block space. So talk about real economic value on the quarter, what the numbers look like.
Yeah, so what we're looking at here is the last 2-year chart of real economic value. This is base fees, priority fees, MEV, which is Jito tips, and the vote fees that are paid to Solana validators. If you're a sole holder, what you're most interested in there is the MEV, the Jito tips. That is your sort of claim on these economics. The rest of that is mostly going to the Solana validators, with half of the base fees actually being burned as well. So as far as like the results for Q3, Solana did about 220, almost $223 million of total real economic value
In the quarter, in Q3, so
in
3
the
months.
quarter. Yeah,
Okay.
total economic activity that's getting paid down to Solana validators. That was down 18% compared to Q2, which again, that Q2 was also down from Q1. But I think if you sort of you zoom out a little bit and just look at sort of the larger growth story, up 241%
Wow.
from last year. So still moving in the right direction,
From
but
the last quarter last year, from Q3
correct.
2024, up 241%.
That's right. That's right. So still seeing some growth, and what drove that decline this quarter? It's really Jito tips. So just less. The active users on Solana were down about 30% during the quarter. So you have a little bit less state contention, less speculative activity. We've seen meme coin activity decline a little bit. We'll get into launch pads and token issuance later in the presentation, but this all led to less MEV on chain for the quarter. That was probably the biggest driver of the declining
Is that what the Jito
economics.
tips are, basically? This part in purple, is that all MEV? Should we talk about that as block-space ordering revenue, really?
That's exactly right. It's Jito is probably the most important protocol on Solana in terms of execution for the user experience, and so almost all Solana validators are running the Jito engine, and that allows transactions to land. It helps with MEV protection potentially as well, and if you're a sole holder, it's through Jito that you are receiving these MEV payments that initially go to the validators. And so, yeah, this is really what drove most of the boom that we can see kind of in the middle of the chart there. And it's been somewhat in decline the last few quarters.
Yeah, I guess there's not really an equivalent in, say, something like Ethereum for Jito. Like Jito is almost like it's not part of the core Solana protocol, but it almost is. It's like quasi part of the protocol.
Yeah,
I saw this week they got actually a very large investment from $50 million raise, A16Z. I mean, I think a lot of people are realizing that Jito is such an important part of Solana and so linked to the growth
yeah.
of the Sol ecosystem that like it's not one and the same, but it's I don't know if you'd call that yeah, kind of an alpha play on top of Sol, but there's something very interrelated here.
I would agree with this, and it's if you're a sole holder, Jito is like the most important protocol on the network for you, and it's going to be interesting to see how this starts to play out, because it does feel like it's somewhat enshrined within the Solana protocol, even though there are separate legal entities and everything there. So we'll see how that plays out. If it's sort of a similar, I think, relationship that Ethereum has with its L2s in terms of
Interesting.
economics, where Jito is right in the middle of all this, but they're not really taking that much currently. Most of it's going to validators and sole holders. So
The other thing I observed with this chart, when you kind of look at the 3-year time span here, 2 to 3 year time span, is how spiky it is, Mike. So
yeah,
the biggest spike, I think this was like super meme coin
that was
mania.
Trump's launch.
Is this
Yeah, right
Trump
there.
launch?
Yeah,
That
yeah,
you could see
yeah,
this in the chart.
yeah.
So, when we think about revenue for, say, large companies, something like an Apple or a Meta, it doesn't usually look this spiky. It's, we got a subscription based business. We're going to sell X amount of iPhones. I mean, you're not going to see insane spikes on a day to day, month to month level like this. What's different here?
It's the nature of the crypto industry, and users kind of coming in and chasing the latest narrative. I think that's sort of what we're seeing play out. And most of the when you see those big spikes, it's typically there's just lots of speculative activity on chain. A
All at the
lot of
same time, right? It's the
all at the same
contention
time.
type of thing. That's why it's spiky. It's because something crazy has happened at this specific moment of time.
Yeah.
That is, and everyone wants to do the same thing at the same time.
That's exactly right, and that is what drives the fees, right? So it's sort of all this traffic all at once. People have to bid up against each other to get their block landed because they're trying to make a trade on chain, and that is what drives. There's only so many, transactions that can get added to a block, and so when there's excess demand, we see the MEV spikes.
Do you think the MEV is more sustainable than sort of the priority fee revenue? So the whole story here is Solana block space is going to continue to expand, right? And since priority fees are only generated when there's contention, when demand exceeds supply, if supply is just continuing to increase and goes kind of like on an infinite type of trajectory, priority fees may stay low for a very long time. Is our MEV fees like block space ordering in Solana a bit less susceptible to sort of, I don't know, eroding as supply of block space increases?
Um, Good question. I would say that they are going to fall probably in the same zone here because they are both dependent on state contention and what users are willing to pay for block space at that point of contention where they're trying to get a transaction to land, and that's always an economic calculus between whoever's making that transaction of how much of that transaction will they pay an MEV where it's still economically feasible to do the transaction, and so I think, generally speaking, this is all about state contention and what users are willing to pay for their transactions to land. And
And
so
you get to charge that state contention when you're the one who is kind of like the centerpiece, I guess, of the order flow. And I know there's been the speculation that wallets might start to pick up some of that MEV. Users might pick up some of that
yeah,
MEV. Individual apps might pick up some of that MEV in the future. So far, that hasn't really happened within Solana, but it could in the future, which is why this is something important to watch. Let's take a look at a related metric called total on-chain yield. This one is down 10% versus Q2 2025, but up 7%, I think, or it's at 7%
yeah,
yield
yeah.
on the quarter. So is this, if I'm a staker in Solana, I'm getting 7% nominal yield on my Sol right now. And I guess this has gone down a little bit on the quarter. Is that what this is saying?
That's correct. Yes. So the total on-chain yield for the quarter was 7.08%. That's the average APY for the quarter. We just talked about how fees are down, MEV is down a little bit. That if you're a token holder, that is going to impact the total on-chain yield that you're going to see here. And for Sol holders, that's MEV. And so it's actually a very similar story to what we saw on Ethereum in the quarter, and that is that 93% of that 7.08% yield is coming from issuance. So it's
Mm-hmm.
instead of the actual user activity and user payments for on-chain services, it's actually the protocol issuing inflation to pay out their supply side.
Which is why we call it nominal yield rather than maybe real yield, which might subtract that issuance.
That's correct. And again, this is only going to impact you if you're sole holder. If you are staking, you are protecting yourself from any dilution that's happening on the network. So that is being paid to you. If you are just holding Sol, this issuance is diluting you. The real on-chain yield was about 0.44% for Solana, and that's coming from the user payments. That's coming from the MEV.
Very
And we,
interesting.
yep, yep,
Okay, let's talk about a metric that I think is very important for these sort of almost like nation state types of economic systems, which is GDP. So, gross domestic product. Tell us about this metric. And I guess the Solana GDP is 909 million on the quarter, which seems still pretty massive, still pretty
yep,
big. Can you talk
yep.
about that?
Yeah, so slightly smaller economy, generally speaking, on Solana than Ethereum. Ethereum had about 2 billion or over 2 billion for the quarter. So 909 million, still strong, even when you're down 6.8% on the quarter. This is again total fees generated by the applications building on Solana. Solana has had several breakout applications, in this cycle in terms of what we've seen with Pumped Up Fun. There's a lot of interesting stuff happening with some apps. So Axiom is a sort of a trading terminal app that's done really well this cycle, and so this is essentially telling us, how much economic activity Solana is facilitating and securing on the chain. The drivers for Q3 were mostly Photon. That's a trading bot, terminal similar to Axiom, down 41%. This is an indication of less speculative activity on chain during the quarter. And then Gito fees were down, pump fund fees were down as there were less new tokens issued on launch pads during the quarter. Um, Radium was a bright spot here. They were up 83%. They launched Launch Lab, which is a pump fund competitor
Hmm.
during the quarter, and they had a really good quarter.
Okay, fascinating. So the reason GDP is kind of the analog here is because this is almost all of the goods and services in the Solana economy. It's almost like all the entrepreneurs and businesses, the revenue, the on-chain revenue that they're creating, this is what that is measuring. So it's like kind of your total economic output. That's why we're using GDP here. The mix is very different than Ethereum, right? So the mix in Solana, we just got off of the Ethereum quarterly report, and it was things like stable coins were
Yep,
among the top. So Tether was among the top,
yep.
and also
Aave, yep,
collateralized loan providers.
yep,
In the Solana ecosystem, the entrepreneur mix is skewed towards like pump.fun fees,
yes,
Radium, which sounds like a pump fun type of competitor. So different types of businesses in
yep,
Solana GDP mix versus Ethereum.
for sure.
Daily active addresses. We are at, what is this, 2.7 million average daily active addresses. That number is down in the quarter. I guess this is part of the mix. Now it's up versus previous year. So
Yep,
again, harking back to the kind of high base.
yep.
Anyway, what is this showing us?
Yeah, it's kind of explaining, why some of this economic activity is down a little bit. Again, you see that huge, spike into Q4 of last year, and cresting into Q1. We've been down 30% on the quarter. This is translating to just less, I think, speculative activity on the chain, and it's feeding. When you have less active users, there's less state contention, as we were mentioning, less MEV, and there's a ripple effect if you're a SOL holder in terms of how that's going to impact you if you're staking your SOL.
Okay, staking your soul. That sounds like something you want to stake. Okay, real world assets on chain. That has been a growth story on the quarter and part of the bright spot. Talk about this.
Yeah, so definitely a bright spot here for Solana, up 42% in terms of tokenized real world assets this quarter. The biggest mover, this was actually similar to what we saw on Ethereum, was public equities. So public equities is still we're coming off a very small base from last quarter. That's why we're up 731%. It's a couple $100 million dollars of equities tokenized on Solana. And similar to Ethereum here as well, where US treasuries are the bulk of these tokenized real world assets. We're seeing some interesting stuff with, issuers like Superstate. I believe Galaxy tokenized their stock, first ever publicly traded firm to tokenize their stock on Solana this quarter. And that's actual,
In a very sort of like native way, right? So it's the
yes,
actual true stock ownership versus some
right,
sort of derivative of
right,
some sort of
right.
SPV or something like that.
Which is really interesting because that means that if they pay dividends or something, that's actually going to the wallet that's holding that tokenized stock, which is really interesting. And then when you start to think about what people will start to do in terms of using these stocks as collateral for other things within DeFi, very, very interesting. What can start to come together with more public equities tokenized. But yeah, solid quarter for Solana in terms of RWAs.
Yeah, so this is one to watch. 682 million in RWAs. Of course, this excludes stablecoins. We have a whole stablecoin section coming up.
Yeah.
Talk about total value locked on Solana. We are up on the quarter and up on the year.
Up on the quarter, up on the year. I do like to just sort of always let people know that you should sort of factor in the price of the underlying assets when you're looking at TVL, just to get a little bit more clear. This is sort of the standard way that it's presented. 11.5 billion of TVL in that we finished the quarter at.
And that means
Close.
it's TVL, it's locked. What's it locked into
Yep.
DeFi protocols on
Yep.
Solana?
Yeah. Thank you. Yeah. So total value of all assets deposited, staked, locked in DeFi protocols, excluding stablecoins here. Um, and we were up 33% on the quarter, and that looks really good. That might have you thinking, okay, there's more tokens that were added to DeFi protocols. That may not be the case just because the SOL price was up 35%. And we know a lot
Right.
of this TVL is SOL. So that is driving sort of that growth in TVL there. Sanctum is a liquid staking protocol. They were up 51% on the quarter. Camino, that's a lending protocol in DeFi, up 38%. Jupiter was up 40%. And Jito was up 12% on the quarter.
Of all of the things we've talked about so far, we've got GDP, we've got total value locked, we have real economic value, we have on-chain yield. Which of those is most correlated to SOL price, or are any of those things correlated to SOL price?
It's interesting because it's different from what we see on Ethereum. So Sol price tends to be more correlated to the real yield, which is different from what we see on Ethereum, where it's more the sort of like ecosystem TVL, total sort of assets
Not
on the
nominal
chain.
yield, real yield, you're saying.
Real yields, yeah, because that's what's driving MEV and those payments to token holders. We do have some analysis in the report. We're not going to get into all of it on this presentation, but we have some analysis on sort of the KPIs that seem to be most correlated to Solana. It tends to be real yield, transactions, GDP less so than what we see on Ethereum.
It's fascinating because that sort of makes sense with how I think about these networks in my
Yep.
head, where I
Yep.
think ETH is a little bit further on the spectrum of being thought of as a store of value asset, whereas Sol is less so. It still
Yep.
is. There's still some sort of monetary premium, but it's less so and a bit more rev cash flow dependent at this stage. So kind of makes sense. Maybe the market is smart after all, Mike.
Fast DeFi versus slow DeFi maybe is
Right.
sort of the breakdown
Right.
there. Yeah. Yep.
Let's talk about another growth story in the quarter and a bright spot, which is stablecoin supply on Solana. So that number is $14.6 billion worth of stablecoins on Solana. That's up 37% in the quarter and a whopping 284% year over year. What is this telling us?
So it's telling us that a lot of stablecoins were issued on Solana in the quarter, and it's nice to see because we can see that that line came down a little bit last quarter. So this is a nice rebound during Q3, up 37%. There's 14.6 billion of stablecoins on the Solana network today. That's about 5.1% of the total stablecoin supply in the crypto markets. So nice growth. Most of this growth is coming from USDC, so they were up about 40%. We do see like very strong power loss with stablecoins, not just on Solana, but on other networks as well. USDC controls roughly 69% of the supply on Solana, and Tether has roughly 20% or so. So it's usually 2 to 3 that have 80 to 90% of the markets on these chains, and then there's a longer tail from there.
What are we looking at in terms of, because we just came out of Ethereum, which is king of stablecoins right now with like 58% of all stablecoin supply. Next, I got to think that's going to be probably Tron in the
Yes.
next order. Where does Solana place in kind of the, I don't know, top stablecoin um, yeah, AUM chains? And how does the growth rate compare to something like Ethereum?
So they grew actually a little bit more than Ethereum this quarter. 37%. Ethereum was I believe 30%, which is a huge move off of a pretty high base already on Ethereum.
Hmm.
Um, And in terms of where they rank, so Ethereum's number one, about 58% on the L1, another 4% or so on L2, so you're about 62% there. Tron is number two. I haven't looked at the number recently, but I believe it's in the 25% or so range there. Solana is just on the next tier
Okay.
down. But again, there's a big drop off there because Solana only has 5%. And then you have all the L2s. Base Solana is like almost on par, closer to being on par with Base is sort of one way you could kind of think of this.
Okay, very good. Now, stablecoin velocity, some of these velocity metrics seem to matter more for quote unquote fast DeFi type chains
Yeah,
like
yeah,
Solana. This is effective stablecoin velocity. This is up on the quarter, a little bit up on the year, but not much, kind of flat on the year. What is this telling us?
Yeah, we really pay close attention to the velocity metrics on Solana because this is really what drives the economics of the chain because it's higher throughput and that's Nasdaq on chain is sort of the whole selling point. And so this really drives most of the economics is the speed at which Solana turns over its capital base.
Just
And
to
so
link
we
that, because more transactions, more capital turnover, more opportunity for MEV, right? More opportunity for revenue.
Exactly. That's right. That's right. And so velocity was up about 42%. That 0.059 number for Q3, the way to think about that is essentially for every dollar that Solana has in stablecoins on chain, like 6 cents of that is turning over every day. So if that was one, it would mean the entire stablecoin supply on Solana is moving every day. So we want to see that moving up. We want to see not just the supply moving, but we want to see the velocity moving as well.
Does this mean 6% of all stablecoins on Solana move over, turn over every
Are
day?
turning over every day. Yes.
Wow, that seems
Yep.
pretty high. And
Yep.
that in comparison to something like Ethereum?
Ethereum is lower. It's I don't want to misquote my own report here, but we have it all in the Ethereum
There
report.
we
It's
go.
lower. It's lower than Solana. Yeah.
Okay, very
Yep.
good. Stablecoin supply, USX. I'm actually not even familiar with this. What does this mean?
USX. Yeah. So shout out to our sponsor Solstice. They are the
Oh,
issuer.
Solstice. These are Solstice. Okay.
They are the issue of the USX stablecoin. This is something they were building in private for 3+ years. They rolled it out this quarter, more for the public, and it's sort of like the Athena on Solana. So what they're doing is offering a yield-bearing stablecoin, and that yield is coming from delta neutral strategies that they're running. So very similar to what Athena does on Ethereum. And this is now the fifth largest stablecoin on Solana, a little over. So they finished the quarter at 167 million. I believe they're over 200 million in AUM at this point. So nice to see some innovation playing out within the
It's kind
Solana
of cool
space.
because this is a different growth mechanism than basically for every dollar in USDC or USDT on Solana, there's a treasury out there somewhere, at least,
Right.
that they're supposed to be. And under the Genius Act, legally there needs to be. With this strategy, this can grow in a different access, which really scales with kind of the amount of delta neutral type plays that are active in the market. And I think Athena really showed that you can grow these things to quite a significant base. So that's the future for USX as well.
Yeah, and I think users want stablecoins for many reasons. But one reason you might want to hold USX is more of like the store of value type thing. You want the yield, right? You're probably not going to use that one to be making all of your
Ah,
on-chain
right.
payments, but maybe you want to hold some of your stablecoins in something that's just going to give you a nice yield. And so I think it's nice to see sort of some product differentiation
Very
playing
cool.
out.
Different types of stable coins. Let's talk about
Yep.
DeFi velocity on Solana as well. And so we already stated that velocity is very important for Sol. More turnover, more MEV. This is up 27% versus last year, but down 18% on the quarter. What's your take here?
So yeah, similar to what we were just mentioning regarding stablecoin velocity, this is looking at the total value locked within Solana applications, and then again, how fast is that turning over on a daily basis? So when we see the 0.37, that's telling us that of Solana's TVL base of 14.6 billion, 37% of that turned over on a daily basis within the network, which is pretty astronomical
Yeah,
to think
that's
about. And that was
37%.
yeah, on a daily basis in terms of the velocity with Dex trading activity.
What are
That was
people
actually
doing
down.
here? It's like ADHD, like Solana users. What are they doing?
It's fast DeFi, so less
Okay,
assets on chain, so less TVL, and then just much faster turnover. When you think about Ethereum, much larger base of assets that maybe don't turn over
right.
as fast. So
Okay.
the story here, and maybe I'll mention. Actually, we'll save it. We'll save it for the DeFi section.
Okay. Okay. Well, yeah, we have a whole DeFi section
Yep.
coming up. But before that, let's talk about token economics. You might call this um, a monetary policy for Solana. So this is the circulating supply, and of course, Solana is issuing more Sol. every single block. So there's an annualized rate here. That number is going up. Can you just talk about what Solana monetary policy is and what we're looking at in this graph?
Yeah, so this is important for SOL holders, especially SOL holders if you're not staking your assets. So Solana has a slightly different like monetary policy from Ethereum. Their issuance schedule is just on a sort of disinflating schedule over time. So it's not impacted by the amount of SOL that gets staked on the network. Where on Ethereum, if more ETH is added to staking, there's more issuance. That's not the case on Solana. So there's just a set sort of lower amount of SOL being issued to the validators over time. However, as you can see in the chart here, it's still inflating, right? When we look at a chart of Ethereum circulating supply, it's pretty flat. This one is going up and to the right. We've had 16% growth in the circulating supply just over the last year. A lot of that is issuance. The other piece of this to factor in, if you're a SOL holder, is this can be offset by burned SOL potentially, but that is very, very low today. So that's just half of the base fees that are being burned. At one point, Solana was burning some of their priority fees as well. That is now shifted to the validators. But yeah, I think the way that I sort of try to think about this is just if you are holding SOL, there is a much greater risk of dilution if you're not staking it relative to if you're holding ETH and not staking it. If you're holding ETH and not staking it, you're not really being diluted, like less than 1% per year. If you're holding SOL and you're not staking that, you're getting diluted over the last year by 16%. So a big difference there, and it sort of pushes, and we see this dynamic when we think about the total amount of SOL staked versus the total amount of ETH staked. SOL is much, much higher, right? So most people that are holding their SOL, they want to be paid that inflation, and so there's a much higher
What is it, like
staked SOL.
70%,
Roughly,
80%,
yeah,
something
yeah,
like that?
roughly in that range. Yeah,
Versus
we
ETH
we
is
have it
like
in the report.
30%? Okay.
ETH is 30%, 29.8 or something. Yep, yep,
Okay, so you really, I guess, as a PSA for all Sol token holders, like if you're not staking, you really should be. There's not no slashing risk for staking either, right? So there's,
right,
I guess, less risk to
right.
actually stake, and then you can use your staked Sol within DeFi anyway, right? Because it's all
That's
kind
right.
of liquid. I
Yeah,
guess what is the monetary policy though here? So what's kind of the annualized issuance? We know Bitcoin is on the year right now after all the happenings where we are at the current point is something like zero point 0.8
yeah,
something
yeah,
um, increase in supply per year. ETH right now, depending on the burn dynamics, is zero point 0.7 something like that. So a little bit
yeah,
less. Gold is 1 to 2% on the year.
yeah.
What is Sol and what's the plan moving forward? Will it decrease in terms of annualized issuance?
It will. Maybe if we flip to the next slide here, we can get into the sort of the this is we call this net dilution rate. Again, this is only impacting you if you're not staking your SOL. But for the quarter, it averaged 4.8% of sort of net dilution for the quarter. That was down slightly, and you might be wondering like how could that be down if the circulating supply is going up? It's because issuance is coming down over time. So the issuance is never rising on Solana; it's coming down, but that is still
It's
inflating
coming
the
down, like,
total.
algorithmically? Like,
Yes,
is
yeah,
it sort of cut every year?
it's a set schedule. It started at uh, the inflation rate started at 15%, I think, and part of the reason that the circulating supply is rising is there are still unlocks on Solana as well, so people should factor
Mm.
that in. But the inflation rate, I believe, was 15% to start. Most networks start with high inflation. Ethereum did as well, and then they stair step that down. They are trying to get to about 1.5% of increased issuance or inflation over, I believe, after like 8 years or so. So they're trying to get it down. It is programmatic, just in terms of the amount of new issuance that comes out in
It's
each
programmatic based
25
on a time schedule, basically, like,
based
kinda
on
thing?
each epoch that's on the network. So it's just programmatically set so that even if more SOL is staked, they're not going to start issuing more SOL to
Okay.
those stakers. Those stakers are just going to get less pro rata of that issuance.
And
And so
issuance is just scheduled to drop over the next 8 or so years to a steady state of 1.5%, and then kinda
that's right.
that be the base moving forward?
That's right. That's the plan there. And similar to what Ethereum's trying to do, like if they can get a lot of on-chain activity and increase the burn rate, then that can offset some of that inflation as well. It's much lower, I would say, the burn even with Ethereum's burn dropping, Solana's even lower today.
And because that burn is only on priority fees, it's not on the big bulk of the MEV type revenue today.
It's actually only on half of the base fees.
Half of the base
They
fees.
used to burn half of the priority fees, but they made a protocol change, and now half of those fees are going to the validators.
Interesting,
So,
okay. So
yeah.
definitely you wanna be a validator in
You
this network for sure,
you
right?
wanna
Like,
be a
pretty
validator,
difficult.
and you wanna pay attention to because some of this stuff, who is not necessarily being announced. How do you find out about these conversations and stuff? So, you gotta pay
Yeah, there's not
attention.
a lot of talk about, like, kinda monetary policy and economics in this, Solana community right now. I mean, this is there there didn't used to be an Ethereum either, right? So it's kind of
Right.
an
Right.
evolving conversation when you have more mature holders, more mature networks.
Yep.
DEX volumes, another bright spot here, and there's some subtlety in these numbers. So 3.97 in terms of average per day, 3.97 billion, I should say. So about 4 billion average per day DEX volumes, which
Yep.
seems pretty large. That is up 279% versus previous year and even up on the quarter. So DEX
Yep.
volumes continuing to increase. Uh, there is public DEX volumes versus private AMM DEX volumes.
Yep.
Public is actually down 9%, whereas private is up 70%. Talk about that. What's the difference here, and what are you seeing in these numbers?
Yeah, this is I still feel like this story is not being told enough of what's playing out on Solana DeFi here, and this is very interesting. So in the chart, that the sort of the green that you see there, that is the private DEX volumes, and that's something that we didn't see. We just started to see it popping up slightly about a year ago, and it's been growing and growing and growing to the point where this quarter private DEX volumes were 37% of all of Solana's DEX volumes. Very
Wow.
interesting. So yeah, so public AMMs were actually
What do we
down in
mean by
volume.
private, Mike?
So these private DEXs are pretty interesting. What they're doing is really enhancing the execution and the user experience for people trading on Solana. And the difference between what they're doing and a public AMM is a public AMM, anybody can contribute liquidity. So anybody in the world, if you got an internet connection and you want to contribute liquidity to a Uniswap pool or something, you can do that. That is not the case with these private AMMs. Somebody is behind that, running it, and they are the ones supplying the liquidity for for the trading pairs. And then what's happening on Solana is they're simply just plugging in to the existing infrastructure on Solana. So they're plugging into Jupiter, they're plugging into Jito, and they're able to offer a superior user experience. Why does Jupiter want to integrate this? Because they're giving Jupiter users better execution, better
Tighter spreads, right? Tighter
tighter
price.
spreads.
Yeah.
Exactly, exactly. So it's an interesting new business model. It is absolutely starting to impact these public AMMs. Radium has historically been the largest DEX on Solana. They still have the most market share, but it's in decline. They're sort of the Uniswap, I would say, of Solana, and their market share dropped to 22%. So this like sort of power law that we were seeing within DeFi is becoming much more competitive. So very interesting, dynamics playing out here.
Do you have any sense for why market makers? Because I would assume somebody's running a private AMM, they're going to be kind of some big capital. They're big market makers, maybe a
Yeah.
Jump or Wintermute, something like that. Why are they opting for private rather than public? Like, kind of a what's in it for them?
They're it's a pretty good business model because what they're doing is essentially tightening the spread for the user. So that's a win for the user. It's a win for Jupiter. Jupiter wants to plug into these AMMs because they're offering better spreads to their users. And the way that the protocol is monetizing that is just taking a sliver of the tighter spread. So it's a win for everybody. The user is getting a tighter spread, better pricing. Jupiter's happy, their customers are happy, and the private AMM is just taking a small cut of that. And as long as they have really high volume, it's a pretty interesting business model.
And market makers prefer this too?
I think so. It's we're trying to get more information. There's been like 7 or 8 of these private dexes that have been popping up. Humidify is the one that really took market share during Q3.
Okay.
We have been unable to get like a ton of detail on who's actually behind these. They're sort of they're private. They're kind of private. They don't have websites. They don't. They're
Dark
sort of
pools.
just operating. Yeah, kind of dark pools. So I'm sure we'll get more information as we go. But it's fascinating to sort of think about that business model, and as traditional finance starts to think more about coming on and integrating with on-chain infrastructure. Is there something there where somebody's
Mm.
going to say, "Wait a minute, we can just set up a private DEX on Solana"? If they have lots of assets or they've got lots of liquidity, kind of interesting. We'll see where this ultimately goes.
New trading tokens,
Yep,
2.75 million in the quarter, I think is what we're looking at. It's
that's right.
down
That's right.
19%. What does new trading tokens mean?
So these are new tokens that are being issued on Solana launchpads, and there has been a pretty interesting story that played out in Q3. We see like a big, red splat in the middle of that chart, which is kind of interesting. Pump Fun is the pink, and they've had market share really since the beginning, since they launched. 90% market share or so. And what we saw in Q3 was pretty interesting. So, um, Radium, which is the largest DEX on Solana, they are sort of at the base layer of some of this infrastructure, and they're trying to integrate up the tech stack, right? So Pump Fun is at the top of the tech stack with the user interface. They're integrating down. They launched Pump Swap, right? So you have them integrating down into the tech stack. You have Radium at the bottom trying to get the user on the top. So what did they do? They partnered with Bonk or Let's Bonk, and they launched a launchpad where that launchpad is leveraging Radium's infrastructure. This was extremely successful when they launched, and I'm sure they had some incentive programs to pull over Pump Fund users. But we can see that it lasted for about the month of July into August or so, and then Pump Fund grabbed those users back, and Pump Fund has regained market share. So an interesting like war, and I think this just highlights how difficult it is to carve out a moat in crypto. Users are extremely transient. It's just a click of a wall. There's very low switching costs for crypto users, and this is part of the reason for this is all these protocols have to pay. So then, what do you do? How do you lock in a user? You need to give them some referral fees. You need to give them airdrops. You need to give them lots of
Mm.
things, and then that just like creates this like transient base of users. But it's interesting to me that Pump regained market share, and we'll see if that continues moving forward.
The raw numbers are somewhat fascinating to me. So what this is basically saying is in Q3, 2.75 million new tokens launched on Solana, correct?
That's right.
And if you,
That's
if
right.
you go back all the way to 2023, which this graph does, it looks like nothing.
There's
His,
nothing.
his
Yeah.
I don't know, a few dozen tokens?
Right. Right.
Like a big theme this cycle has been token explosion on top of Solana, and the majority of these, of course, are like creator tokens. They're meme
Right.
coins essentially.
Right. Right.
Uh, to-
That's right.
yeah, trading platform revenue. Talk about this number, why this matters. It's 214 million on the quarter.
Yeah. So again, fast DeFi metric here. So why do we track this stuff, and why is it important for token holders? This is looking at trading bot infrastructure on Solana. So because of the amount of speculative activity on Solana, the amount of meme coins, the amount of traders that are on Solana, there are these platforms that essentially make it easy for anyone to sort of copy trade other known traders, do interesting things, do lots of sniping when new tokens are launched and things like this. These platforms sort of facilitate some of this activity, and it gives us a view into just the speculative, nature of what's happening on chain. So we want to know, are these platforms growing or contracting? We did see a small contraction in the third quarter. What really started to play out is Axiom, which was a Y Combinator startup, came out and essentially like aggregated all the services that were sort of bifurcated within Solana DeFi. So they
Mm.
created this terminal where they're allowing their users to get access to all the new token issuance on the launch pads. They've integrated with Hyperliquid. They've integrated with every important Solana DEX, and then they've integrated with things like DEX Screener for sort of token discovery. And they're trying to pull together this full suite of services to serve sort of the maybe we'll call it the Solana trading community. And they have taken market share. So they have taken 70% market share in this sector.
Wow.
They are 70% of these revenues. A little bit of a lesser known story on Solana because they don't have a token, and but they are starting to compete with like Pump in terms of total revenues that they're producing. So
So they're just minting money without a token then. And
that's
they've done
right.
this very fast.
And they're and we just mentioned how how hard it is to lock in users. What they are doing, they don't have a token, so they didn't sort of do an airdrop and that type of thing for loyalty. They actually have a really interesting referral program where people come over and refer other users onto the platform. They give them kickbacks from trading fees and things like that. So about 30% of their revenue is kicked back to traders that have referred other traders and are also doing lots of activity on the platform. So a little bit different from like just buying back the token, like maybe you see with Pump or Hyperliquid, but they're actually just basically it's sort of like their customer acquisition costs is one way to think about it. It's just like these referral programs, and they pay out about a third of their revenue through that. So
Okay, Mike, this has been great. Thank you for going through all of this. I guess maybe as we're thinking about some closing remarks. So I'm putting myself in the shoes of a soul holder for all the soul holders kind of listening out there. Right now, price is about $180 per soul. So, down from all-time highs. People are kind of, I guess, up from $8 or
right,
whatever it
right,
was
yep.
during the bear market. So you got to appreciate that. How should soul holders think about the quarter overall? You called it mixed. What do you think this means for the quarter? And then how does this reflect moving forward?
Yeah, I think mixed is probably the right way to think about it. If I'm a soul holder, I'm zooming out and just looking at sort of where are we today, right? Maybe not, let's not compare to like the Trump mania that we saw, Q1 of this year, but where are we at today? Where were we at a year ago? Where were we at 2 years ago? And I would say the Solana ecosystem is in a really, really healthy shape. And you just mentioned, the token was trading at $8 after the FTX implosion. There were concerns of
That was
developers
just three
fleeing, and
years
that
ago.
was 3 years ago, right? This has been an incredible redemption arc for Solana, and for the people that stayed there, built, and attracted other users and other builders. So I think Solana. I think the way I think of this is like so. There was a point in time where Ethereum also had many challenges early in its development process, but there was a point in time where it sort of crossed the chasm, and everybody sort of realized that Solana was not, or that Ethereum was not going anywhere. And I think we can sort of say that for Solana now, and I think that's probably the biggest takeaway of this cycle for Solana. And moving forward, it's just going to be interesting to see what institutions do. I think these next few years are all about what are institutions going to do in terms of how they start to build on crypto infrastructure, and where's that going to play out, and is Solana going to continue to be more of, I would say, the fast DeFi, the maybe more a little more consumer use case. I think what's interesting to me, and a conclusion that I came to this cycle for Solana, is that crypto VCs for years have tried to fund gaming use
Hmm.
cases in crypto. The gaming use case in crypto is trading on Solana. That is a game.
Yeah,
That is a game,
it is a
and
game.
everybody loves it. And that is the number that has number one product market fit on Solana. And so to me, that's a consumer use case. That's not an institutional, right? That's not Nasdaq on chain, because that's like a consumer use case. We're going to see if Nasdaq on chain happens with public equities, real world assets getting tokenized, and that's going to be a competition between them and these other smart contract networks.
Well, the
So,
competition is still raging and will continue to rage into the next quarter. Mike, this has been fantastic. So this was the Q3 2025 Sol quarterly report. Next time Mike and I will do this will be around January 15th of 2026 in the new year, and we'll be doing that for Q4. Do this for Sol. We'll do this for Ether as well. You can find the full report. We've only gone through a fraction. You can find the full report at the DeFiReport.io. It's also fantastic accompanying Dune dashboards around this. So go find that. There'll be a link in the show notes at Dune. This is where all of the data that Mike and his team of data scientists draw upon to come up with these reports. Let's see what else. Oh, archive of this will be available on Bankless YouTube, also on X. I think that's pretty much everything,
yep.
aside from a shout out. So if you're looking for Mike's opinion on the cycle and where the market goes from here, which I think is in everyone's head listening to this, you and I, Mike, are doing an episode on Monday on Bankless that should come out on Tuesday, where we're going through your thoughts on the cycle. So maybe that's a cliffhanger and a next step for some folks listening.
Yeah, for sure. So people should tune in for that. Thank you, everyone, for tuning in here today. And I just wanted to just a quick shout out to our friends and data partners as well. We did most of our building on Dune, and that's where about 90% of the data in the report is coming from. We
Would you say
also
the
work.
best Sol dashboard that
I
exists?
I think it's the best Soul dashboard that
Okay,
exists. Like we put a ton of time and effort into making sure that we are accurate with all of this data. It's public. Anybody can audit, this data. But we've also worked with other partners, and we've included some of their data: Token Terminal, Artemis, Glassnode, um, RWA.xyz for real world assets. All great partners for us. So we want to thank them as well.
fantastic. All right, guys, we'll leave it there. Thanks a lot. We'll see you next quarter.